Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very nice day of trading today. And in today's markets, guys, well, unfortunately, we had a decent day of declines pretty much across the board. You can see from our sectors over here, every single sector pretty much ending the day in the red. Why is that the case? Well, it came off the back of an unfavorable producer inflation report that came in early this morning. So in today's video, we're going to take a look at a few things, of course. Number one, go over that producer inflation report and see exactly what happened. Number two, I have a few company earnings reports prepared for you guys today. And of course, those are going to be Costco and AVGO Broadcom, both reporting very solid numbers. So we'll take a look at their earnings in just a few short minutes. Thereafter, we will take a look at our broad market technical analysis, go through all of our major sectors and see which ones are healthier and which ones are kind of struggling a little bit. Do technical analysis on those. Thereafter, take a look at our big tech names as well. See how those are withstanding today's blow. And of course, at the end, guys, take a look at a few swing trade opportunities that I am closely monitoring in today's market environment. And that's going to be pretty much it. No portfolio update for today. I will save that for a very big recap tomorrow. It's been a very good week for myself and the members in the Discord. So looking forward to showing you all of the juicy gains that we were able to make this week, even though depending on which sector you were invested in this week, it may have either been a very good week or possibly a very bad week. So let's get into that, right? So let's get into the SPY down about 0.52%, QQQ down about 0.65%. Take a look at the heat map as well. As you can see, guys, pretty much for the most part, broad market decline once again. Now, we did have a few names that dropped a lot more than others. Adobe after their earnings, UNH continuing their declines amidst the less than favorable press headlines that the company's been getting surrounding the unfortunate assassination of the CEO in New York City, of course. But for the most part, guys, big tech did a good job of holding up the gains, right? No multiple percentage declines there. Apple and Microsoft were doing fairly okay on the day. Microsoft was up over 1.5% today and then kind of gave it all back for the most part. A few highlights here in consumer defensives. Coca-Cola and Pepsi, Walmart and Costco were down. To the downside, financials continue to struggle, continue their daily downtrend consolidation. Healthcare continues to be a pain point in the market. And the bottom half of the market, guys, industrials, real estate, utility, all similarly being affected by the slight uptick that we've had in 10 and 20-year yields. So all across the board, guys, not the best day in the market, which is why I say, depending on which sector you've been invested in this week, you would have had either a very red week in the portfolio or a very green week if you were mostly invested in big tech. So we have a bit of a divergence in the market right now. About 2, 3, 4 weeks ago, it used to be a case of everything else was doing very, very well, except for healthcare. Everything else was doing very, very well, and big tech was kind of somewhat muted. And now we're starting to see the big tech rally come alive and make up for the rest of the declines in the rest of the market, which is why I put so much emphasis on rotation in the markets, guys. Follow the money and you will make some decent money as well. Taking a look at the one-day relative performance, you can see that pretty much everything was negative across the board, except for consumer defensives. 1 week relative does kind of show the same thing. A lot of red in the markets, depending on what you were invested in, but communication services and consumer cyclical were up. Technology as a whole, right? As a whole, the entire sector is net down for the week, despite the most recent rallies in some big tech names. So before we get into more technical analysis here, guys, let us dive right into a few company earnings. Let us first do the producer inflation numbers, shall we? So taking a look at exactly what we got this morning, it was slightly less than favorable. We know that yesterday we got the CPI, which basically came in line with expectations, and the market reacted very well. Today, producer inflation showed somewhat of a different picture. The producer price index month over month was expected to come in at 0.2 for the month. They came in at a double, 0.4% to the upside. And year over year, we came in at 3% versus the 2.6% expectation. So is it over? Is inflation coming back? Is inflation here to stay? Well, inflation is going to be on a bumpy path back down to 2%, but producer inflation is slightly different than consumer inflation. Take a look at the historical graph right here, guys. We're currently sitting right now at the read of 3. Now, granted, the read of 3 is much higher than we've had, especially over the past 1.5 year of trading. It's actually the highest read that we've received in the last 1.5 years. However, in the grand scheme of the context of producer inflation, is it a high number? Well, in all reality, no. Even prior to the pandemic, you can see here, there was a period from 2017 to all the way through 2019 that we had a few pops into the 3% range. go back even earlier than that, 2011 through 2014, and you can see there are a few occasions here where we're kind of peaking up into the 2% range, 3% range as well. So I would still say that this number, although elevated in terms of recent history, is not that elevated when we compare it to the historical averages of producer inflation. So today, a little bit of a pain point, but as I've been saying, guys, unless we truly start seeing a skyrocketing of inflation in both directions, not only producer, but also consumer, inflation should still be on a path towards 2%. Is it going to be bumpy? Are we going to get a few hotter than expected reports here and there? Yes, but those reports will also be counterbalanced with a lot of beats as well. I'll remind you, not so long ago, the October read coming in at 1.9, that was a big beat to the downside. So a little bit of seasonality here, a little bit of cyclicality in terms of producer production capacity, but that is okay right now. I wouldn't be so nervous. However, it once again reminds us that there are several elements to the bear thesis that we cannot forget, right? I posted this video roughly about 2 weeks ago at this point, the week of Thanksgiving. We cannot forget that there is a ton of bearish catalysts to be on the watch for. So I will be constantly monitoring the data, guys. I am still roughly 70% bullish on this market, 30% bearish, and the 30% bearish is just because of the sheer amount of possible catalysts that we have. And the inflation resurgency, guys, is one of the catalysts, right? Inflation will come back, whether it's due to Trump's implementation of tariffs or possible economic mismanagement, or just rather consumers going out and spending all their money too soon and having a little bit of an uptick in inflation. This is one element of the bear market thesis that we cannot forget, right? So the tone that I'm still adopting right now is being cautiously optimistic in both my trades and my longer term positioning as well. And when we have data points like this that come in far below the expectations or far worse than the expectations, it just goes to give a point to the bears. That is why I remain cautiously optimistic and truly data dependent, right? Not full on YOLO, full on call options in the bull market. Those are nice, but these reports always give us a stark reminder that there is still a lot of bearish catalysts that we have to kind of get through to have a full green-lit bull market economy right now. So that being said, that's pretty much everything for the producer inflation numbers. We're not going to go through the breakdown, guys, because they change every single month. And a lot of these are somewhat cyclical depending on which season you're in, right? Whether it's summer, fall, or winter, a lot of these numbers will wildly vary a lot. So I wouldn't say that one report is enough to derive a trend that inflation is going to skyrocket once again, but we need to pay special attention to this one nevertheless. That being said, that is pretty much it for your producer inflation numbers. Now let's dive right into some very nice earnings, which are going to be first Costco. So Costco coming out today, they were down about 0.63% before their earnings. And after earnings, as you can see, guys, the declines really weren't that meaningful. From the close, we are only down what? About 0.3%, 0.4%, really not that bad. And that is why I love investing in this company for the long term, because we're never really expecting anything super surprising in terms of the earnings on a quarterly basis. Usually the earnings are just quite muted. It is business as usual for Costco. And I've been doing these earnings reports for Costco ever since I started the YouTube channel. And it's always been a question of business as usual. Now, the proposition for Costco, because, I do agree that the valuation of the company right now is fairly high. And we will get into that just a little bit later. However, I need to remind you of the business proposition that Costco offers. They offer extremely low prices to their members. This has never been a company that is focused on bottom line net margins. They are focused on customer retention and expansion of top line revenue. And by providing their customers, here's the competitive advantage of Costco, here's their moat. By giving customers the best possible prices and making things cheap, right? Very good quality for a very good price. You attract customers, and when you attract customers with that value proposition, you tend to keep them within the business, which leads to Costco having a very high retention rate and very high customer loyalty. That is the competitive advantage of Costco as a whole. It is the company's ability to source deals for very attractive prices because of the volume that they do, and then relay those prices directly to customers without putting on too much of a markup. That leads to very high customer loyalty, a very high retention rate, and an ever-increasing rate in customer memberships. Let us dive into the earnings, shall we? So moving into Costco right now, they beat on EPS by about 6.7%, fantastic beat, but they had a tiny little miss here on revenue by about 6.57 to the downside. So an ever rare miss on revenue by Costco. Let's have a deep look at the numbers, shall we? So Costco beats on earnings as e-commerce sales jump, right? So customers have remained selective with purchases, but the CFO added, they have shown they're willing to spend, especially as inflation comes down, if they see a combination of newness of items, quality, and value, all things that the Costco business model brings to the customer. He said Costco's strong sales of meat and produce indicate that shoppers are dining out less and cooking at home more. Walmart said the same thing. He added the retailer has seen a bifurcation with the member, some who are still spending on high quality premium cuts and others with a gravitation towards those lower price per pound items across categories like poultry and cuts of beef and pork as well. This is what's good about having a membership card for Costco. Whatever you scan your membership card, they know exactly which items you've purchased, and I assume they're using a bunch of algorithms to derive people's spending habits depending on what they buy. So they have a lot of customer insights. So when they say something, we kind of have to pay attention, right? Now, despite the miss on revenue right there, we can see here Costco's net income rose to $1.8 billion, which is very good, guys. That's about 2.9% net margins, which is roughly in line with the company's averages. You can see on a yearly basis, that is literally the exact same number we got last year. Costco's net income margins never really go higher than about 3%. It's always between, low twos to high twos or in that respect. So they're doing a good job of protecting their net margins in the current environment at least. Now, the quarterly results are the first Costco has reported since that fee increase took effect in September, talking about the membership increase fee, the first one in 5 years, as a matter of fact, and people are still signing up and they are still retaining customers. Costco's membership fee revenue came in at $1.17 billion compared to the $1.16 which Wall Street estimated, so they beat the estimate there. It jumped by almost 8% year over year, fantastic growth for their membership segment. Now, comparable sales for the company increased 5.2% year over year. So you have these fantastic increases in numbers for year over year comparables in three wholesale/retail companies: Walmart, Costco, and Amazon. Other retailers, as we saw with Target, are struggling. So it goes to show, guys, when you have a solid business model which is focused on the consumer, and depending on the macroeconomic environment, you readjust either your pricing or your product mix, you can still do very well. When you have an execution problem like Target does right now, that is usually when you tend to stray to the side. Moving on further, the company's average ticket was up 0.1% worldwide and 0.3% in the US, including the negative impact of gas deflation and foreign exchange rates. If adjusted to exclude those two things, average ticket would have risen 2% worldwide and 2.3% in the US. So not only is traffic rising 5.1%, comparable sales are up, but also the average ticket for every member is also increasing too. So they're having more customers come in the store, and those customers are also spending more money. Both very good things for Costco right now. Costco's private label brand, Kirkland Signature, is growing faster than the total business. Fantastic, guys. They are very good at providing a high quality product, especially when it's their Kirkland brand. If you guys don't know how they run the Kirkland brand, it's very, very simple. Costco strikes deals with actual food producers for granola bars and stuff like that. They will private label partner with a brand like Quaker Oats and try to get a very good price for very high quality items. That is how they're able to deliver very good quality amongst their Kirkland brand. The Kirkland brand products are made by companies that you guys know very well. It's just that then they become the private label under the Kirkland brand when they're repackaged as such. Now, e-commerce sales, very good point for the company, rose 13% in the quarter compared with the year ago period. Companies gaining market share by shipping big and bulky items. It hit nearly 1 million deliveries in the quarter, which was a new record. Fantastic expansion there. Who also had very good e-commerce sales? Walmart, both companies dominating the landscape right now. Online traffic, conversions, and average order value all increased year over year. Very solid. Membership renewal rates were 90.4% worldwide. Fantastic retention from their customers. It ended the quarter with 77.4 million paid household members, an approximately 8% year over year increase. Now, Costco opened 7 new clubs in the quarter and plans to open 29 during the fiscal year. 10 of those clubs will be outside of the US. The company has a total of 900 clubs, 617 in the US and Puerto Rico. If you guys want to know where the rest of the stores, well, got a lot in Canada, Mexico, Japan, United Kingdom, South Korea, Australia, Taiwan, China, Spain, France, Iceland, New Zealand, and Sweden, of course. So if you guys haven't seen, guys, Costco is pretty much the same wherever you go shopping all across the world. Here is a feed from the brand new store in Shenzhen, China. And you will see that this one was open earlier this year. It is absolutely packed. No matter where you go in the world, Costco is always going to be packed. And they have been extremely well received in the Chinese market, in the Japanese market, and in Taiwan as well. And they all look the same. They keep the entire store layout pretty much the same all across the board. So this store may look familiar to you, even though it is in Shenzhen, China. So looking very good here. You guys can go through these if you want to. You can go to the ones in Japan, the ones in Taiwan, the ones anywhere, and they will all look the same. And you will see the foot traffic is always very, very, very solid. So now let's move into one of their earnings slides, and I'll show you guys how strong of a company this is. Net sales, 7.5% year-over-year growth. Comparable sales, 5.2%. Fantastic. Comparable traffic, 5.1%. E-commerce sales, 13%. Look at the expansion, guys. US, Canada, other international, doing very, very, very well. Here you have a few divergences in tickets due to the foreign exchange and gasoline deflation, as they were saying. But look at the foot traffic. The foot traffic is fantastic regardless of the market that they are in right now. Gross margins have expanded fairly well as well. Net income, they have the growth there. EPS still steadily growing as well. And SG&A, selling, general, and administrative expenses, were actually down. So doing a great job at cost control of the company for sure. And here's the highlight, guys. My favorite slide, right? Membership income growth. Membership worldwide retention rate, very, very, very solid. And now net new members looking very good. Why is the total cardholders different than paid members? Well, quite simply, guys, because you can have 2 or more members per household, right? So these are the actual paid memberships, 7.6% year-over-year growth. What a fantastic company, absolute fantastic company. 13% in e-commerce sales, as you can see. Site traffic, 16%, and average order value was up 4%, looking very, very, very strong, guys. And here you go. We're getting some new warehouse expansion for the company, looking very strong. There is literally nothing bad to say about this company, guys. It is literally business as usual, and which is why I love the brand so much. High member loyalty retention rates, great value to the customer, and that is synonymous usually with a very strong brand and a very well-positioned company. Now let's dive into the valuation of them, shall we? Because I know a lot of you think that Costco is expensive, and it is. So in terms of valuation, guys, we can see right here that it's not very cheap at all, guys. And Costco has never been a very cheap company, depending on which portion of the cycle you're in. Sometimes you can find some accumulation ranges, which represent a very decent buying opportunity. But up here, guys, it's getting a little bit rich, even for someone like me, to add any further shares. That being said, the forward valuation right now at $9.88, where it stands in the after hours roughly, is about a 55.3 on a forward price to earnings ratio. When we divide that by their EPS growth, even though it's not the best metric to use for a PEG ratio, because the EPS growth rate is under 10% per year, it gives a PEG ratio of 5.64. Very, very, very rich. Not as rich as Palantir, but still very rich. And the free cash flow yield is extremely low at about 1.48%. Usually I look for free cash flow yields between 2.5 to 5%, which is the standard for a mature company. At 1.48, it is really on the lower end of the spectrum. So not a good deal, whether you measure the company by its growth or by its return to investors. It's not a very good company in terms of valuation, at least. Take a look at the P ratio history right here, guys, and you'll see that on a trailing basis, we've now hit highs at around, 53.60 in the last couple of quarters, which is much higher than the company has been trailing in the past roughly 5-6 years, right? As you can see, the price to earnings ratio for Costco simply always goes up. Why? Well, because the stock price is going up higher than the company is able to drive earnings growth, EPS growth, or higher than the company is able to grow free cash flow growth as well. So why do people keep buying this company? Well, guys, it comes into what I was saying earlier. It's a very consistent, a very predictable business model with very high customer retention rates, a very good brand loyalty, and very good quality of products. These 3 things Wall Street likes a lot. When you have a very predictable business model, they tend to give you a a little bit more multiple expansion. This company is owned 70% by institutions, and institutions are really not looking to sell this company anytime soon. It's been a long time since I've seen a large institution divest from its Costco position that they've been holding for years. So it seems as they really like predictability and consistency in those earnings. That being said, guys, I mean, we take a look at their business model, right? They're growing very well. EPS is growing well over the next 4 years, and the revenue stream is growing well as well. Not a very big problem for them. They keep opening new stores, and every time they open new stores, they're very, very, very selective with their locations and how many stores they open, right? They do not want to dilute too much in terms of stores being too close to each other or whatnot. In terms of the financial health of the company, you can see that there's really not that much debt at all on the balance sheet. Balance sheet gets an A+ from me, a lot of free cash flow here, a lot of cash on the balance sheet, and really not that much debt at all. So the company is very well positioned. But in terms of the valuation, guys, this is one that I don't mind holding my long-term shares that I've accumulated for a while, but it's not as if it's a very good buy up here. However, if it's your first stint in the market and you're looking to build a core portfolio of extremely solid companies, I think that Costco definitely has to be one that is up for consideration. Now, if I had maybe $10,000 to invest in the company, you can see it just keeps going up, right? So we may throw in a little bit here, and this is a perfect example of a company that you just have to kind of dollar cost average into over time. If you look to pick the bottoms for one large position, it's probably not going to be the best company for that. So the best way to enter this one, if you have a long-term time horizon and you love the company, want to hold it for the next 5, 10, 15 years, yes, it's not cheap right now, but it can be a perfect example of a company that we just kind of DCA into over time if we do have some declines in the stock right now. I would just go with normal price action, even for a little bit of a swing trade setup for me, guys. In the event we can retest maybe down here, the 940s, even back down to possibly low 900s, could be interesting for the good old breakout, retest, and run trade that I really like to take on the channel. So that is pretty much everything for Costco right now. Hopefully you guys enjoyed those earnings recaps. Now, moving into the second company, which is going to be AVGO Broadcom. So AVGO, fantastic earnings from them, guys. Take a look at the stock in the after hours right now. The stock is up almost 14% in the after hours. There was a lot of jitters coming into this one because we know that the semiconductor industry has not been faring too well, at least over the last 3-4 months, even though most of all company earnings that we've had recently this quarter have all been fantastic. The industry just cannot seem to get that other leg higher, can it? So a lot of pre-earnings jitters on this one, and AVGO delivered in a fantastic way, beat on EPS by 1.88%, but they did miss ever so slightly on the revenue. The revenue miss is counterbalanced by the beat on bottom line earnings. So let's dive into the Broadcom earnings, shall we? And here it is. Here's why the stock is up so much. Broadcom shares rise 13% on profit beat and massive opportunity in AI. The AI train is not slowing down anytime soon. And if you didn't believe TSM when they said this a month and a half ago, if you did not believe NVIDIA when they said this 1 month ago, here you have another one of the industry leaders saying the exact same thing. The demand is still absolutely insane for these products and for the AI ramp. Now, they said artificial intelligence revenue for the year more than tripled. That is insane. The chipmaker's stock jumped after Broadcom CEO Hock Tan said the company is developing custom AI chips with 3 large cloud customers. Who can they possibly be, guys? Well, take your pick, right? It's either Amazon, it's either Microsoft, Facebook, Meta essentially, or Google, right? So it's 3 out of those 4 companies. Take your pick. Now, moving on further, Broadcom said it expects first quarter revenue of about $14.6 billion, just ahead of the $14.57 estimate. So not only did they have a fairly decent quarter here, slight miss on revenue, of course, they did have fairly good guidance, which is coming in above the estimate. For the fourth quarter, year-over-year revenue increased 51%. That is fantastic. Net income in the fourth quarter came in at $4.32 billion, which is about a net margin of 30.7%. Very, very strong for the company. We'll take a look at their earnings slides in a little bit, but what I wanted to show you guys is, look at the revenue expansion. Revenue expansion is very good. Gross margin expansion is very good. Free cash flow expansion is very good. And adjusted EBITDA is also fantastic. You have a huge jump right here. So the company's really been doing leaps and bounds in terms of scaling its business into this AI infrastructure ramp. Now, moving on further, in its Semiconductor Solutions Group, which includes the company's AI chips, revenue increased 12%. Broadcom is seeing soaring demand from the boom in generative AI infrastructure. For the year, the company said AI revenue jumped 220%. Absolutely ridiculous. Some of that growth is from Ethernet networking parts, which are used to tie together thousands of AI chips. Here's what the CEO had to say further. We see an opportunity over the next 3 years in AI. Massive specific hyperscalers have begun their respective journeys to develop their own custom AI accelerators. Tan said that the total market opportunity for its AI chips, which it calls XPUs, as well as parts for AI networking, could be between 60 billion and 90 billion by 2027. That is fantastic for the company, a company that's generating about $30–40 billion in revenue, still see upside in the total addressable market through 2027. Broadcom said its infrastructure software division generated $5.82 billion in revenue for the quarter, nearly tripling from last year's $1.96 billion. That includes the boost from the $69 billion acquisition of VMware, which was completed after the year-ago quarter, which did add a decent amount of debt to the company, but they're integrating the VMware business extremely well into their already existing business. That being said, let's take a look at a few highlights, right? If you guys don't know what AVGO does, they're pretty much a jack of all trades, right? They have enterprise software. They're a service provider. They provide, obviously, many components for the hyperscalers in terms of data center applications. Now, we have broadband end-to-end solutions, wireless mobile device connectivity, a ton of components that are used in everyday devices that you guys may know as well, industrial as well, automation, renewable, automotives. So they're really a jack of all trades. They have, I think they put it up here somewhere, they have over 21,000 patents, one of the broadest IP portfolios in the entire game right now. So looking extremely strong is AVGO, guys. Let's just say it how it is, right? They're absolutely crushing the game right now. We already went through the financial data, so I'm not going to bring you guys through this slide once again. But if you take a look at one more, they also are paying a very nice dividend on those shares, and they're starting to pay down that debt from the Broadcom acquisition too. I mean, the VMware acquisition as well. The VM acquisition, you'll see right here, guys. Net margins have been expanding very, very well on a year-over-year basis. Now, they had declined here in the last 3 quarters as they were ramping up infrastructure, spending a lot of money on capital expenditures, spending a lot of money on research and development as well. But if there's one thing that I want to see these tech companies spend their money on, it is definitely on research and development, not executive compensation of shares, and not spending it on, marketing and sales, which is good, but you want to see most of the bulk of the operating expenses go towards research and development, something that this company does very, very well. Taking a look at their financials, guys, well, you can see that the only slight problem here is the acquisition of VMware. You can see how much debt it actually added to the company's balance sheet in the last 3 quarters. The company debt right now stands just under 70 billion. And you can see that since they made that acquisition, they are using their free cash flow to start to pay down that debt, which is a very smart move by Broadcom. They do generate a decent amount of free cash flow per year, talking between 17 and 20 billion dollars. That should be the expectation for this year end as well. So the balance sheet is not doing too bad in spite of that heavy acquisition of VMware. Now, moving on further, you can see that their EPS expansion trend is very good. We can trust the CEO when he says the demand is going to be there, and that will translate to further gains in EPS, and especially further gains in revenue as well. Demand is on fire for AVGO, and the expectation as well is for that demand to continue, as the CEO said, through 2027. So as they stand right now in the after hours, guys, at $206, is the company still a buy? Well, let's have a look, shall we? I'll do the fundamental rundown, and I'll also do the technical rundown as well, because there's a pattern here that I've been, one of my favorite trades that is possibly on deck for an entry as well. So as we can see, CEO states the big demand through 2025, through 2027 as well. No supply constraint. That's a big one. High free cash flow, high net margins, good buybacks, not too bad share compensation for management and executives, and medium debt, as we saw from the VMware acquisition. Now, taking in consideration the revenue growth of 15%, EPS growth of 21.5%, we get a forward PE for, this should say 2025, my bad, I didn't adjust it, but this is 2025. Let me just actually change it right now in case you guys are either watching with low sound or you maybe just missed this part and review the chart. It'll make a lot more sense. So for 2025, we have at 206 a forward PE of 33.5. Not that bad, especially when you divide it by their EPS growth rate. We get a PEG ratio of 1.56. I'll remind you, anything under 1 is very, very cheap. Over 2 starts to be a little bit expensive. So right now at 1.56, it is just that. It is decent and very good. I would not say it's overvalued, but I would not say it's the deal of the century either. That being said, I am a big fan of this company. I think the 3 best players in all of the semiconductor industry right now are TSM, AVGO and NVIDIA, just in terms of the chart layout, right? In terms of domination and competitive advantage and moat, I would include ASML in that list as well. Now, moving on further, in terms of them being all the way up here, 206 for a technical trade, guys. Well, you guys know by now, right? This is going to be the breakout and possible retest. What does this chart look like, right? Where we have a nice weekly uptrend, loss of the weekly uptrend a little bit, and then push higher. What does this chart look like? Almost identical, almost identical, guys. Take a look at this. It looks like Meta. It literally looks like Meta. Nice expansion, loss of the weekly uptrend, big push, and then looking for the retest and run. Broadcom is offering almost the same key setup, but now we've broken through roughly 6 months worth of resistance, guys. So it's a big one. So possibly entry for a breakout, retest, and run. So I'd be looking for a retest possibly to add a swing trade position or any longer duration shares if you are a big fan of the company, because they are still at a very decent valuation right now. So whether for a longer term swing trade or longer term position, or for a short term swing trade with the retest of this level here, 184 to 175, could be a very interesting proposition for some follow through in 2025 with the big demand that was just reiterated. So that is everything for our earnings recaps today. Hopefully you guys enjoyed those. Now, shall we? Let's jump right into our technical analysis of the major indexes. So coming into the SPY, guys, if you take a look at the daily right here, you will see that, we haven't really lost any major levels. Let me just zoom in on this so it's very clear, right? Have not lost the major levels. The major level is the low of Tuesday. Now we know the context is a beautiful daily uptrend right now. However, if we lose the lows of yesterday, or rather Tuesday, we will be looking at a daily downtrend. Is the sky falling? Is it over, guys? No, because who's in control here? Well, it is definitely the weekly bulls. Take a look right here. Weekly bulls are in full control of this weekly uptrend right now. So even if we get a little bit of a daily downtrend, just understand what we're looking for on the higher time frames. Looking for a higher low at this point, guys, and arguably anything above 585, just looking for a weekly higher low for further trend continuation. So in the event we continue getting rejected in or around this trend line at about 615, 617, we could just be heading for a little bit of consolidation before possible further trend expansion. I see no red flags. It is still a very beautiful uptrend for the S&P. Moving on to the QQQs right now. So the Qs also not having the best day at all today, despite starting the day close to yesterday's highs. We kind of eroded them all throughout the day. So the context as well is quite clear. Daily uptrend is very nice. Looking for a daily higher low. At this point, anything above 518.77. Looking for a daily higher low for possible further trend continuation. Now, in the event we lose this and set up the bears for a daily downtrend, is it that big of a deal? Not quite, guys. We have a big layer of support coming down into here around the 515 down to about 510. Not looking too bad there. And when you zoom out, when in doubt, always zoom out, guys. You will see that on the weekly, no major levels were lost either. He's looking very solid for the Qs, not even close to losing the 12 EMA, which is your guide time frame for any uptrend as a whole. So right now, as we can see, still a very healthy weekly uptrend, and any extended consolidation on a daily time frame for a pullback, we'll just be looking for a weekly higher low. At this point, anything above 494, just looking for that weekly higher low for further trend continuation. So the bulls with a lot of support areas below us, I would not be too nervous as of right now. And as a matter of fact, in the after hours trade as well, we are up off of those AVGO earnings. So tomorrow may be able to end the week with a little bit of a green day. We will see. We don't really have any economic data tomorrow that could come in the way of that. So we'll see if the bulls are able to give a little bit of a push for an end of the week rally. Moving into financials right now. Well, financials have been consolidating now for a better part of the last 2 weeks. Daily downtrend is still in motion right now, and it looks like they do want to embark on another leg of daily downtrend selling. Is it that big of a deal, guys? Not really, just looking for a weekly higher low. We know that this sector ran a ton and very far away from the 12 EMA. Usually when financials get extended from the 12 EMA, we can see a pullback or at least maybe some sideways motion back into the 12 EMA, which is the guide time frame on the weekly. As of right now, it is still a very healthy context of a weekly uptrend, and the bulls are looking for a higher low, anything above 46.20 for a weekly higher low. I've brought this one up a lot of times over the course of the week, but I mean, all these charts are looking the same. The banks, they ran a ton since the election and now just looking to pull back a bit. That is Bank of America. Here is JP Morgan, same setup. Here is Wells Fargo, same setup. Here is Charles Schwab. Charles Schwab hasn't even really consolidated to the downside that much. Take a look at the investment banks, same setup, rally after the election, and now pulling back a little bit. That is Morgan Stanley. Here is Goldman Sachs, same thing. And when we look at the credit card issuers too, huge pop after the election, and now just been sideways consolidation on Visa. MasterCard as well has been largely sideways with a slight uptick slight bullish bias rather, and American Express as well, slight sideways action in the last 3 weeks of trade. So all in all, financial consolidation still remains healthy, but for the S&P to truly get the lift that we want to see in the S&P, we will need to find some participation from some other sectors. The QQQ bulls have done a great job at, keeping the market afloat over the last week of trade. You can see the last week, depending on what you were invested in, of course, you're either up big or down slightly big as well, right? So we need to see further participation. They cannot keep holding up the sector on the market on their own. We need to start seeing some broad market participation, especially from the two other heaviest sectors in the game, which are financials and healthcare alike. So I'd like to see financials find a local bottom soon, maybe in the next week of trading, and then they can kind of keep up the weight of the S&P. If the QQQ bulls need to take a little bit of a breather, you need to see XLF and XLV especially be there to pick up the slack. Speaking of XLV, let's take a look at their chart. So XLV unfortunately coming undone again today as the plummet on UNH continues. I mean, UNH, guys, it is a very large weight. You can see it. My big head's in the way. You can see UNH and Eli Lilly are very large weights in the market, and they have not been performing too well for various reasons. Eli Lilly is, of course, the RFK Jr. headlines. Bobby Kennedy, somewhat of a risk coming into Trump's inauguration in January. We're not quite sure what policies he may push for in terms of regulation on the healthcare sector, the drug sector as well, in terms of not only pharmaceutical drugs and pills, but also vaccinations. And Eli Lilly does a lot of those, right? UNH, of course, and the healthcare providers also up for grabs, not only because of the UNH CEO news as of recently, but also because we're not too sure, and Trump has not been very clear on how he possibly plans, if any, to reform the healthcare insurance sector. So there was a lot of timidness in the sector leading into Trump's inauguration, which is why I am kind of passing on the sector right now. I personally need more clarity on policy moving forward, because keep in mind, these policies will be in effect for at least the next 4 years. So I'm willing to wait another month to have more clarity for the next 4 years. And as a result, I have not been really positioning in any healthcare companies, although a lot of them are at attractive levels right now on very nice dips. I personally want more clarity on the direction of the sector as a whole. So hopefully that makes sense. In terms of XLV, they have been coming down. Now they have sacrificed the entire move to the downside. Whoops, wrong tool. Now daily downtrend is well underway as well. So at this point in time, guys, sacrificing all the momentum, the weekly downtrend simply just continues. And this was one of the risks. Even though the bounce was very healthy and gave the bulls a very good chance at resetting the daily uptrend, this right here was the UNH news, and the sector never really recovered. It pretty much engulfed to the downside, and now they have lost all the momentum. So even though it had a good chance at the daily uptrend recapture, it was only that. It was a probability and a chance. It's not a 100% success rate. That being said, waterfall drop right now on the weekly downtrend simply continues, coming into an area of support, which is the 140 down to about 135 area. Let me just unsquish this chart so it makes it more clear. This is what we're dealing with, coming into huge prior resistance, which will be newfound support for the bulls. We are in jeopardy right now of losing the monthly uptrend as well by breaking the 138 lows. If we lose that, it doesn't necessarily mean that we're going to fall off a cliff. Essentially, what it just means is that we may have an extended period of consolidation to the likes of the one that we had back here. So finding a support level down here and possibly consolidating until we have more clarity on Trump's policies. That would be the expectation in my humble opinion. Moving into semiconductors right now. So semiconductors down 0.97% today, but have a look in the after hours after those AVGO earnings, the sector is up 1.73%. So not looking too bad. We will see how it opens and closes today, but as of right now, the bulls playing adequate defense to say the least. The context was a daily downtrend, and now looking for the daily uptrend expansion. We will see. Can they get it done? We will need a break and close above 253 to the upside. And further than that, guys, we need to close a weekly candle above here, the 260, to really get that trend expansion that we've been looking for, because we know this sector has been very muted for the last 6 months of trade. So to really confirm a brand new weekly leg higher, we need to start closing above 260, and we will need broad market participation from semiconductor players, not only from NVIDIA, not only from Broadcom, not only from TSMC. I'm talking about it needs to be everybody that starts participating. And for that, there needs to be a renewed interest in the sector by Wall Street, because there has not been much interest in the sector as of late. You can also blame the tech trade war right now between China and the West in terms of export restrictions back and forth, China versus the West and the West versus China. And until we get more clarity on that situation as well, it could be a little bit of a bumpy path, which is why my preferred way of playing this sector is continuously writing short puts under the market on my favorite companies, which at this current time are AVGO, TSM, and NVIDIA on dips. Moving on to IWM Russell. So the IWM also struggling a little bit today, 1.3% to the downside. Why? I keep saying it, guys. Look at the 1 week relative, right? So the Russell, I'll bring this one up every single time, the whole time that we're consolidating, just to kind of drive the point. The Russell is basically the S&P 500 of small caps. Look at the sector weightings. Financials, industrials, healthcare all have higher weights than technology. And as a result, when you look at the broader S&P, industrials, what have they been doing for the last week? Net down. What have financials been doing for the last week other than Visa and MasterCard? Net down. And what has healthcare been doing? No secret, net down. So when you have 3 out of the 4 major sectors in the IWM that have all been down, it's normal that you're just having a grind lower on this index. That being said, as we were saying yesterday, guys, now it's official. Daily downtrend has now been set by the bears. So daily downtrend in motion right now. Any bounce going to be looking for a lower high. Anything below or 239 pretty much going to be looking for a lower high for daily downtrend continuation until we get a reversal in these 3 sectors: financials, healthcare, and industrials. So far, we have not gotten it. That is what we need for the Russell to really start getting some lift. That being said, the weekly is still not looking too bad at all. It is still a nice weekly uptrend with a very decent weekly higher low. And now we're looking for another weekly higher low. At this point, anything above 226, looking for that weekly higher low for possible further trend continuation. Now we're coming into a big area, which is the prior resistance area from 2020 and 2021. Should be very big support. The 12 EMA is sitting right there as well. So could we maybe find a base and maybe trickle around here a little bit until we get some more bullish price action in some of the other major sectors? Absolutely, and that is also what I'm expecting for the sector. Moving on to the Dow Jones. So the Dow Jones also plummeting. Does this look familiar? IWM and the Dow Jones? Well, it's normal, right? The Dow Jones is a price-weighted sector. If I bring it up here, Dow Jones 30 list of companies, you guys will see what I mean. Dow Jones is a price-weighted index. It is not a market-weighted index, market cap-weighted index like the S&P. The Dow Jones, who has the most impact on the Dow Jones? It is the companies with the highest share prices. And of course, there's a multiplier. However, this is how it works. The companies with the highest share prices are the ones that move the index the most. What do you notice about these companies? Well, the number one is Goldman Sachs. They've been consolidating. United Health has been down a lot. Microsoft is there as well. Home Depot, part of consumer retail / industrials, not quite, but Caterpillar is definitely industrials. Sherwin-Williams as well. Salesforce, Visa, American Express, they've been consolidating sideways, right? So you guys can understand now that amongst the top companies, guys, you have a lot of industrial names down here, Honeywell. So for all the tech companies that are bringing this one up, you have a lot more other companies that are kind of bringing the index down. That is why the Dow Jones has been struggling recently. So keep in mind, guys, right? Daily uptrend was clear as day. And now, guys, we're having the daily retracement. So anything above 42.9, looking for a daily higher low for further trend continuation. This is not a daily downtrend just yet. It is just a one single drop move. They never reset the hourly uptrend, right? No reset of the hourly uptrend. So we cannot say this is a daily downtrend just yet. It is just looking for a daily higher low. Anything above here, daily higher low for further trend continuation. Even if we set up for a daily downtrend, well, just looking for a weekly higher low. Anything above that same area, 42.9, just looking for a weekly higher low for possible further trend continuation. And it's been a very nice weekly uptrend so far. As of right now, no major red flags. In terms of yields, we'll touch upon those tomorrow. In terms of gold and oil, we'll touch upon those tomorrow as well. Crypto, we'll touch on those tomorrow as well. Why? Because literally nothing has changed since yesterday. Bitcoin has not lost any levels. I'll do a 5-6 minute segment on not only Bitcoin, but also on Ethereum, also on a few altcoins too, and the Bitcoin dominance. But as of right now, guys, we looked at them all the days of the week, and right now we're just not breaking through any major levels. So I'll kind of skip through crypto today. In terms of our big tech names, however, big tech not looking too bad in spite of today's declines, right? So Apple up about 0.6% today, not looking the worst. So as we can see right here, Apple has been in one massive daily uptrend, is looking still quite attractive right now. That being said, up 0.6%. What are we looking for? Any consolidation, looking for a daily higher low. Anything above 241, looking for a daily higher low for further trend continuation. And even if you see Apple lose this into a daily downtrend, that is going to open up one of my favorite trades once again that I've been talking about the whole time, guys, which is the weekly breakout and retest of the 236 down to about 232 level. If we get a retest of this range, could be a very nice swing trade opportunity for Apple. The chart is set up very nicely right now. And if the bulls just go on an absolute tear, well, the overhead resistance remains put at 250. And then you kind of go with the psychological numbers, right? 260, 270, etc. The 10 numbers. That being said, Apple in a decent position right now. Is it a buy for me on the long term? Not really. The company is fairly expensive right now. I'll redo this valuation tomorrow probably. They're setting about a 3.5 peg. And the free cash flow yield now is probably down to about 2.7. So not the best look for a long-term position in Apple because the company is not cheap. But for a swing trade, I would not be opposed to it. That being said, I'm not selling any of my long-term Apple shares. It's just I'm not buying any more up here. The company remains a hold for me. Moving on to AMD right now. So AMD was up 0.35% and up a little bit more in the after hours today after those AVGO Broadcom earnings. That being said, still in the context of this big daily swooping downtrend. The bulls with a lot of work to do. They have to first reset the daily uptrend and thereafter look to engulf this weekly move as well and get us the weekly uptrend back. Why is that important, guys? Because we have no time frames right now. It is a monthly downtrend. It is a weekly downtrend as well. As you can see, we now flushed into the weekly downtrend and we have no daily uptrend either. So rather than trying to pick the bottoms, I'm going to be patiently waiting for the daily uptrend. Now, if you have a long-term view for the company, talking about investing for the next few years, then obviously you don't have to wait for that. You can just kind of slowly DCA into it. But if we're looking for the trend shift into the expansion, I need to see the daily uptrend because it gives me a better stop loss. Get the daily uptrend, I can enter here on the break of the daily uptrend higher, put the stop loss here, and then target my levels for possible weekly trend expansion as well. That being said, the bulls not looking, they're not looking strong, but we're not losing a major level right here, which is the 127. If you lose this 127, guys, quite simply, the next line of defense comes all the way down here at the 200 weekly EMA, which is sitting about the 115, and further support below us right around there, 115 down to about 105. That's going to be the next pocket of support. So if the bulls need to do anything, is they need to get their butts in gear tomorrow. So hopefully, AVGO is the catalyst that AMD and the whole sector needs to really start turning on the afterburners and reversing a lot of these short-term drawdowns in terms of the other semi names that are not TSM, NVIDIA, and AVGO, right? That being said, at right now, 130, the valuation is extremely cheap. At 137, it was already cheaping up. Now it's already cheaper, so not looking too bad at all. And in terms of the growth of the company, right? Well, the analyst price targets are a lot higher than the current share price. Gives a lot of room to safety, even if AMD cannot perform to the tune of the estimates, it still leaves a lot of growth to the upside. Even if they only deliver 70-80% of this EPS growth and this revenue growth, the company would still be very cheap right now. That being said, the outlook is looking very bullish, but it's been caught in a few negative headlines as of recently. Their chips are underperforming the Blackwell ones. Amazon has said that the demand for the AMD chips is not so strong. So the sentiment around the brand right now is very cheap, but you can argue as well that now when sentiment is in the toilet for the brand, that now is possibly the time to be considering some of those swing trade opportunities if you have a long enough time horizon, talking about the next 3 to 6 to 9 to 12 months type of thing. Moving on to Amazon right now. So Amazon with a little bit of decline today, 0.56%, but does it look that bad in the grand scheme of things? No, not really. Amazon's still in a very healthy daily uptrend right now. The daily higher lows are very close. The lows of Tuesday, 224. So the upside target right now has to be the psychological 250, right? So that is still on the table. But in the event we lose this and lose the daily lows without making new highs, indeed, that would be a daily downtrend formation. And good thing the bulls have a lot of space on the weekly time frame for it. Weekly uptrend is looking very solid right now. Just going to be looking for a weekly higher low for further trend continuation. That being said, on Amazon, guys, a retest of this level would be your most recent support, talking about 215 down to about 210. If ever we pull back here, this is my next swing trade zone for some Amazon longs. Amazon is looking extremely bullish position into 2025. Their earnings were fantastic, and they're putting more and more growth on bottom line net margin expansion, EPS expansion, and free cash flow expansion. 3 things that deliver much better returns to the shareholder, and 3 things the company has never truly made a mandate of focusing on before 2 quarters ago. So we have a bit of a business shift here on Amazon from a company that grows top line revenue at the expense of everything else, and now a company that's more focused on driving shareholder returns. this is going to be probably one of the biggest winners in 2025 if they can keep that same angle to the business, right? Now, moving into Google down about 1.57%, but they deserve a little bit of a breather, right? They've been up pretty much, 10% in the last couple of days, so looking pretty good, and we have crossed a major level, which was the prior all-time highs. Who is in control of this chart here, guys? It is definitely your daily bulls right now. At this point, anything above 168 seems as though we were just there yesterday, and we were, right? Looking for a daily higher low for possible further trend continuation. This is going to be the first line of defense right here, 191 and about 188. And if you get through there and pull back into a daily downtrend, well, the bulls have tons of space on the weekly, guys. Beautiful, beautiful, beautiful weekly trend expansion for the bulls right now. Would just be looking for a weekly higher low. And if you pull back even a few weeks in a row, coming down back into the 180 region, that will be a classic breakout, retest, and possible run trade. I would like very much to buy more Google down here if I'm presented with the opportunity. And even right now at 193, guys, it's not that expensive, right? We did the peg at 165 just a few short weeks ago. But I mean, 193 divided by 165 is about 17% higher. You do 17% higher off of the peg, right? And you're only seeing about a 1.41 peg. Still, at 193, the cheapest name in the entire big tech list as a whole. So even here, guys, if you have a decently long time horizon and you like the company, it is not that poorly valued right now. It is still very, very cheap with a lot of upside runway growth, in my humble opinion. Now, moving on to Meta, give me a very brief moment. Meta down about 0.3%. Not that bad of a day today for Meta. Even though the whole market was red, they're still holding gains relatively close to the all-time highs. That being said, daily uptrend is gorgeous for Meta right now, right? As you can see, daily uptrend. This is just one single large leg higher at this point in time. So in the event, because we never lost the hourly time frame, whenever you want to know if they lost a break, if they have a daily higher low, watch the hourly time frame. If you have no loss of the hourly time frame here, this is not really a loss of the hourly time frame. Let me put it on regular hours because extended, it kind of skews the data, right? You can see if we put it on regular market hours, they never lost the hourly time frame ever. This is just a retest, and then we never lost it. Continuation, right? So that is one single very, very large move from the lows here of 565. Anything above 565 is just going to be looking for a daily higher low, right? And it could free up one of my favorite patterns. If we unravel here into a either big daily downswing or a daily downtrend, just keep an eye on the weekly time frame here, guys. The most important time frame, in my humble opinion, will be for a possible breakout of the all-time highs, retest of those all-time highs, and run. Those previous all-time highs, I will remind you, is this green box right here. 600 down to about 585. We can call it retest of the prior all-time highs. Could be a very juicy swing trade opportunity for a very, very solid company. Moving into Microsoft right now. So you can see Microsoft was up 1.5% today, and they gave it all back. The bulls possibly looking a little bit tired. Daily overbought conditions at about 69.70 right now, but the bulls have created so much space here, guys, off the lows. Any move down is just going to be looking for a daily higher low. Anything above 418, so much space looking for the daily higher low for possible further trend continuation. And even if they reset into a daily downtrend, is it the end of the world? No, it's going to open up once again one of my favorite trades, guys. The breakout retest trades are everywhere, absolutely everywhere, as I was showing in yesterday's video too. Beautiful weekly trend expansion. This is the most important time frame on Microsoft. And you can see the weekly MACD as well, crossing after 6 months of negative momentum. We are finally starting to cross to the upside on the MACD, looking very good. Weekly uptrend expansion is there. So any extended daily downtrends, right, leading into weekly consolidation, we're just going to be coming into a very strong area of prior resistance, which is now going to be support, breakout, retest, and possibly run. These styles of trades are everywhere on big tech, guys. Apple, breakout, retest, and possibly run. Amazon, breakout, retest, and possibly run. Google, breakout, retest, and possibly run. Meta, breakout, retest, possibly run. So just watch for these setups. Let the market come to you. Be patient. There's these setups everywhere. No need to chase up here, guys. If you want to be patient enough, wait for the setups to come to you. I'm pretty sure that one of them will offer a similar setup. So Microsoft looking very good, very happy with the way that we've been building positions on the channel since the lower areas down here. And now we are finally reaping those rewards on Microsoft. Moving into Netflix right now. So Netflix down about 1.18%, but I mean, in the grand scheme of things, guys, they're really not down that much, right? Take a look at this. Very beautiful daily uptrend. Still in a very beautiful daily uptrend. The lows of last Monday, or this Monday rather, are going to be the higher lows. And if we lose those, daily downtrend is underway because we didn't really make a new high here. daily downtrend would be underway. If you have a loss of the 12 EMA on the daily, that would mean that you're losing the short-term trend, going into further daily downtrend consolidation, and that would just be your first weekly leg of consolidation down. Good thing for the bulls. They have a lot of space on this chart, guys. Look at how much space the bulls have created since the most recent leg, right? At this point in time, guys, you know, anything above roughly 680, I mean, you can argue 745, and I could give it to you, right? 2 weeks of consolidation. Anything above 745, just looking for a higher low for further trend continuation. Whether you use here or here, one thing is for sure, the bulls have a ton of space. It's just that we're weekly overbought right now, so it could be due for a little bit of a retest down here. The first line is going to be pretty much the 850, 830, where we touch the 12 EMA as it kind of curls into this level. Moving on to NVIDIA, very solid company though, however. Moving on to NVIDIA right now. So moving on to NVIDIA, wasn't too sure what happened there. My software kind of gave me a weird message. Hope you guys are still there. You know, I would hate to refilm this video. Moving on to NVIDIA right now. So NVIDIA down about 1.41% as a whole. Not the worst day for NVIDIA, but you can see they did have a, you know, somewhat of a decent pop in the after hours if I actually turn them on. So after hours pop was actually quite nice. As you can see from the close, NVIDIA is now up about 1.5%. So we will see how they close the week. Should be closing the week maybe around 139, 140, unless the markets give back all of the positive price appreciation. Daily downtrend is clear as day, however, right? Daily downtrend in motion, protecting the lows. Now it's up to the bulls. Can they turn this around with a new renewed leg of bullishness provided by the Broadcom earnings? We will see. We will see. They're battling against a couple different things right now. The infamous head and shoulders that everybody on social media loves to point out. Apparently the stock is going to zero. No, but in all seriousness, in the event that the pattern does play out or the overall sector continues to be somewhat unfavorable, then the daily downtrend will simply continue at that point, and we will be retesting 130 down to about 125. However, break this area to the upside, 146, you have a brand new confirmed daily uptrend. That puts an end to weekly consolidation, giving you a new weekly higher low. And if you ask me, guys, the weekly is the guide time frame right now. Beautiful weekly uptrend in motion, sideways consolidation now for about the last 2-3 months. This, in essence, is a bull flag. Where are the bulls consolidating, guys? They're not, when this move happened, where are they consolidating? They're consolidating in the top 15, 20% of the move. This is a classic bull flag. It's not as if they pushed up, then gave half of it back and are consolidating down here, which is uncertain, right? It's not as if they pushed all the way up here and now consolidating all the way down here, which would be a bear flag. No, no, no. They made a huge push consolidating near the top. This remains bullish, provided that you have the higher time frames, which NVIDIA does, looking very, very juicy on the monthly for some trend expansion. Why does it keep going on to log? My bad. So looking for a monthly higher low for further trend continuation. So all in essence, if we come down here, I'm buying. If we come down to 120 to 115, I will be buying a lot heavier. So still looking to write short puts under the market. NVIDIA, though, looking quite solid, all things considered. Now moving on to Tesla. Tesla also having a little bit of a down day today, 1.57% to the downside. A little bit of consolidation. Overbought conditions yesterday were about an 80. So not looking too bad. This is still a new all-time high for Tesla right now. In the event the bulls are a little bit tired, we have a breakout retest coming. Beautiful daily move higher, possibly looking to retest the prior all-time highs, right? And until this candle on the weekly closes above this range, I will not turn this box green because there's a chance the Tesla just gives it back tomorrow and just confirms the resistance, right? It did it several times in the past where it tried to push in here, was not able to close. So that being said, we will see how it closes, but looking for a possible retest of support, which is 410 down to 378, possible breakout, retest and run. The key area is going to be the retest of the 12 EMA, in my opinion. The weekly bulls working with a lot of space here. Weekly uptrend is clear as day. So any loss of a daily uptrend, something like this, right, just would be for weekly, very healthy consolidation. The next line of defense of which, of course, would be 360 down to about 330. No major red flags on Tesla. Just it's a little extended right now. I am personally looking for the retest trade, possibly for a cheeky little position for a long. Now, lastly, Palantir. Palantir also not looking too bad today, 0.95% to the upside, but still, you know, consolidation at the top. No major levels have been lost. That happens if we lose the lows of yesterday. In the event we lose the lows of yesterday and the 12 EMA at the same time, that would be a first daily downtrend in quite some time for Palantir, right? So that would be a first daily downtrend, and then we would be heading into much needed weekly consolidation at this point in time. In terms of the price action, though, no major red flags. The bulls still have the uptrend. For now, it is sideways consolidation, looking for possible expansion back into the 80 range. If they can't get it done and we consolidate, where are we heading into? Most likely this area right here, possibly coming down to maybe retest the mid 60s. Would not be opposed to seeing that. That would be a very logical technical move and would do some very nice consolidation on the weekly timeframes right there. So not looking too bad at all, guys. So that's pretty much everything we had for, and I will be shopping for Palantir. If we come back down here, even though it's expensive, I'll be looking to shop for some short puts, maybe in the mid 50 range, because it'll come down with some momentum. It'll open up the implied volatility, should give me some very good entries here on some short put opportunities, writing puts under the market essentially, right? That's what I'm looking for. A few swing trade opportunities that I am exploring as of recently as well. Number one has to be e.l.f. Beauty. e.l.f. Beauty with a very gorgeous weekly trend expansion, looking for a little bit of consolidation. If e.l.f. Beauty continues their decline into tomorrow or offers up the daily downtrend, I will be looking to write some short puts in one of these two ranges. If it comes down hard enough, we may even be able to write some puts 115 down to about 110. That is my preferred range to write some puts. And if the price actually comes back down into here, 122, well, I'll probably be looking to maybe set up for a monthly higher low setup for some call options. I really like this one heading into 2025. The timeframes have been cooled down a lot with this big consolidation, and the median analyst price target, you guys can see e.l.f. Beauty's price targets are pretty much in the $150 to $200 range on average, right? So if they give me the gift of coming back down below 120 to 110 could be a decent area to position for myself for some longer duration calls, because it seems as though the bulls now want to embark on the higher time frame control. So it could be a decent opportunity. I'm still looking at Coca-Cola. Coca-Cola still trying to reset the weekly uptrends right here. Could be a very decent opportunity as well. Why? Because it's a monthly breakout, retest and run, retesting of all the prior resistance range, now using this range as support for possible price expansion. Entries around here are not the worst proposition, right? Because the risk to reward profile is very juicy. If we enter a trade here, the risk is really below here, because then you invalidate the weekly uptrend attempt essentially, right? So the risk would be down here for the stop loss, but the reward is all the way back at our weekly highs all the way up there. You can see it's a risk to reward ratio of about a 2.15 right now. Very decent for a very solid company such as Google, right? A few other trades that are possibly on my mind right now. Another one that comes quickly to mind, of course, that I brought up a few times is UPS for the same reasons. UPS, I love this one for some short puts, but even for some longer term shares, guys. We're kind of bouncing from the 2017, 2018, 2019 levels, using those levels as support right now. And down here is the 200 monthly EMA, a very, very strong level to say the least. So although we have been consolidating sideways and it does look weak, we are compensated with a very juicy 5% dividend for holding any shares for a longer duration swing trade. So that one is not a bad opportunity at all, to say the least. SoFi as well remains a swing trade for me. If we can possibly retest maybe, the lower 14s, maybe into the high 13s with a broad market pullback, any consolidation looking for a weekly higher low, right? We've now established that we're trying to break into this region right here. So if we do retest the lower end of this region, talking about 14 and the 12 EMA, which is playing catch up right now, wouldn't mind taking a slight little entry on the SoFi chart for further trend expansion. So that one is looking quite good too. And then gotta save the best for last, right? So Uber, of course, guys, has been getting hit with negative headline after negative headline. The headlines yesterday essentially were that GM was discontinuing its Cruise autonomous vehicle program. And unfortunately for Uber, that was their partner, because Uber does want to develop robo-taxis of its own. And the partner that they were employing to deliver cars to them when they were ready was GM with the Cruise software for autonomous vehicles. That being said, Uber is getting hit. This was the Waymo news in Miami, which we went over a few times on the channel. Is quite ridiculous. Now, at this point in time, guys, Uber's valuation is trading at a ridiculous one peg. This is very, very cheap, guys. Extremely cheap. One of the cheapest big tech names out there, in my humble opinion. Well, I mean, it's not really big tech, but you guys understand what I mean, right? It's a technology company trading at an extremely attractive multiple. So when that's the case, I am buying. So as a matter of fact, I did buy a Leap contract yesterday when we hit the lows of 60.84. Now, seemingly, we're going to revisit that. My next DCA on the Leap call options is going to be about the $58 to $56 region. I think that is it's really a gift, guys. If you have a long enough time horizon, talking about the next year and a half, I really do believe that this is free money right now. Even though I can't give financial advice, it's free money for me. If I'm wrong, but I think it's free money right now. Daily oversold conditions coming into a large area of weekly support. Those are two of my biggest criteria for leap call options. Couple that with a very attractive valuation, and you have a recipe for a very high probability risk to reward setup. So I am starting to position with some leap calls. I will average into the position, and we'll be building a fairly large position on leap calls. Uber has been part of my long-term portfolio for quite some time now, and that will not change. I'm holding this one for the next 5+ years to come. This, my swing trade right here, is just that. It's a swing trade with some call options, and I'm going mid 2026 for those call options as well. And now the last one, of course, which I'm going to keep an eye on, but I don't believe it's quite ready yet. We need to have a bit more data, but is UNH, right? UNH, an extremely solid company. You've seen me playing it many times on the channel so far. The only problem is that it's coming in very, very, very hot, right? So I'm not in the business of trying to pick a falling knife, even though it is starting daily oversold. It has rather lost all the time frames. Daily downtrend is clear as day right now. It has now lost the weekly uptrend that it had as well, lost the weekly uptrend, and now we are into big monthly consolidation. As a matter of fact, it has also lost the monthly higher lows. They were going for the monthly trend expansion. We have now lost all time frames. So in my opinion, there is no rush to buy into this stock right now. If we come back into this level, however, 485 down to about 450, this would be an extremely attractive buying opportunity for an extremely solid company. But as I say, short-term headline risk because of what happened with the CEO, very unfortunate situation. And we also have the impending or incoming risk of the Trump administration and not having the clearest policy as to what he plans to do with the US healthcare system as a whole in terms of overall healthcare insurance, right? So a lot of uncertainty factors. And when we have uncertainty factors on the table, I want to get a very good price if I'm to assume the risk and assume the uncertainty. And for me at this point in time, it has to come down below here, 486 down to about 450. This is going to be the level where I will be willing to pull the trigger. It's coming in very, very, very hot right now. So I'm going to let it cool off and pretty much, you know, unless it comes down into here before the inauguration, I'm probably going to wait for any healthcare plays until after the inauguration, until we get more clarity on policy, because as I said, it will be impacting all of these stocks over the next 4 years. So those are just a few of the swing trade ideas that I've been exploring as of more recently. I'll give you guys a full portfolio update as of tomorrow, and you can see even more which other swing trades that I've been doing. But as of right now, that is pretty much it for today's video. So if you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We are getting pretty close now, guys, to 5,000 subscribers, which is a very big milestone. And I thank each and every one of you for pushing me further and further to these milestones. It's been a very pleasurable journey. I thank all of you guys for watching, all of your participation in the comments, all of your very amazing questions, and hopefully you guys have been able to learn a few tricks and tips here from these videos. And as always, guys, if you have any questions, always feel free to leave them down below in the comments. I'll be very happy to answer you, usually within the first 24 hours. And that's pretty much it for that. And in the event, guys, that you want all of the real-time trade opportunities that I'm making in real time, here are the trades from last week. Here are the trades all throughout the Discord history, right? So you can see the green boxes are wins, the reds are little losses. The losses are usually very tiny, and the wins are usually quite decent and quite consistent. Past performance, I cannot guarantee for future results either, but you guys know me. I'm pretty consistent in the strategies that I employ on the channel as well, whether it's leap call options, short-term call options, call debit spreads, short puts, long dated and short dated as well. So if you guys want access to all of those different trade opportunities, because it's not only the wheel, I do a ton of other things as well. I want access to all of these various trade opportunities and the live trades. Well, the link is down below in the description. You also get the private morning live streams every Monday through Friday for about an hour or two, private member videos that will not be featured on YouTube in terms of options, strategies, positioning, psychology, technical analysis setups, things like that. They're in there. And you can also ask me all of your juicy stock and option questions all throughout the day, and I will do my best to help you out in terms of positioning without it being financial advice, of course. So if you're interested, guys, the link is always down below in the description. Hopefully I see you in there soon. And if not, well, I guess I'll see you back on the channel. So take care. Have a good one. Wrap up the week strong. Have a good day of trading tomorrow, and I'll see you tomorrow after the close. Take care and peace.